Within the large uptrend, there is a great example of an ascending triangle with near-perfect features. There are clear swing points and clear bullish volume spikes, with large green candles at the start and end of the pattern. Selling pressure with the downswings is moderate to low, and significantly subside into June. The one large red spike before the breakout is normal due to the wider upper range and volatility that often occurs. The only thing that could be more ideal would be a more narrow upper range, but that is not much of an issue as there was no breach of 65 after bullish volume and price action gradually increased to hold over it in the last week of June. The pattern also has the quality of neat price action, with most all candles neatly contained within the outline. This adds additional clarity and stability to the successful completion of the pattern. As would be expected, there is firm support despite a large drop, due to the ascending triangle's upper boundary now reversing roles. Interestingly, the drop results from a small double top, with initially lower volume, as it had a slightly delayed completion into early August, though overall a flat to declining outline emerges towards September, when there is the unmistakable bearish spike around 71 that saw the double top's lower boundary finally assert a stronger downtrend. Again, there is nice neat price action with almost all the real bodies of candles nicely contained within the gradual declining range in the lower 70s. The downtrend line will be helpful in estimating the possibility of any upswings that could transition towards a longer-term recovery. Since mid-September saw a large green candle rather than a red one, there was no clear three methods falling price action to add greater short-term bearish sentiment to make for a faster breach of support. Instead, there was some contention and a more gradual but consistent decline under 65. Short-term bullish sentiment over the past 2 days shows promise in moving out of the gap down range. The gap down candle defines a wider upper boundary directly taken from its high and close prices. In what emerges as a flat bottom, November sees the bullish reversal range complete, with progressively increasing bullish price action and volume. Note the abnormal decrease in volume and mainly low price action in the 2 days after November 21st. This is due in part to some very short-term indecision and consolidation after clearing 53.22, in addition to being the period around the Thanksgiving holiday when volume is normally low. The uptrend soon advances with great success due to large green candles and volume spikes, making closes above the gap down fill centering around the 56 level. There is natural alignment as the current uptrend traces its reversal range back to clear reversals in the past few years. Without a doubt, the uptrend has halted ever since late December. This wasn't just normal low activity during the holiday period from Christmas to New Year's. There is the development of a clear upper boundary around 60.20, which sees several downswings with consistent bearish volume that is beginning to increase. At first, there was a clear double top that didn't drop far due in part to the holiday period, but more importantly, the 5780 area that was the site of key swing points in the recent past. This led to roll reversal with a decisive upswing off it, to return to the 60 boundary, where the final downswing created a spread out triple top in the wider 5780 to 6020 range. Since the downtrend line was drawn with such clear swing points and a major reversal pattern, it remained quite precise in addition to the previous price ranges and levels. Though there would of course be less precision with these during periods of higher volatility, such as during the uncertain periods in mid-2019 and early 2020.